AM-1 Partnerships for Financial Inclusion in Latin America and the Caribbean. I think we all agree that yesterday was a very full, but a very rich and productive day. We had conversations not only within the context of this room and the formal setting, but certainly outside in the hallways, around the tables. And I see already the beginnings of some very important and possibly really impactful relationships emerging from some of the discussions that we've been having. Today, of course, we have a number of sessions this morning and this afternoon, and then you have the opportunity to do the round tables in a much smaller setting where you have a chance to be much more open and you can have a longer conversation that gets to the heart of what it is that you want to get out of this particular seminar. My role here today is just to bring it together. At the end of the day, we'll talk about the way forward and some of the concrete actions that we'd like to see following the seminar. But now I'm going to turn this over to Esteban Alshul, the Chief Operating Officer of Acción, who's going to be the moderator for the first panel. And we have excellent speakers, so we're all looking forward to what will come out of this one. Thank you again, and let's get started.
Thank you very much. Good morning, everyone. It is really a pleasure to be with all of you here today. I want to make a brief special thanks to all the teams, specifically at the OAS and the State Department, for putting this together, and the other sponsors as well. I think it's a terrific event. And I want to single out Osvaldo Gomez Martinez for your excellent work, tireless work for bringing us all together. So thank you, Osvaldo. You really have brought together the right people and the right players in the room. And I think with that, we have the chance to carry things forward, which is something you mentioned yesterday. My understanding, this event has actually been thought through in the sequence and the flow of the panel. So yesterday was more about setting the context for financial inclusion and what we are here about. And today is more about getting a little bit more practical, sharing experiences, lessons learned, and to really think about what we can carry forward from here. When I was invited to this conference, I come all the way from Bogota currently. You always ask yourself, how good is this going to be? And I think so far this is terrific. And frankly, I was very excited for this panel. I told them that last night that they are the stars, not me, and they really are, because this is, if there's people in the financial inclusion space that can share a lot of experiences and have a wealth of knowledge, this is absolutely the right panel. So I'm looking forward to it. So let me give you a very brief introduction of who is joining me today, but then they'll speak more about themselves. Then I'll tell you more about what we're trying to achieve in the panel itself. So to my left is Daniel Shivlovsky. He's the Superintendent of Banking, Insurance and Private Pension Funds Administration of Peru. He's also a professor, you should know, and I'm told he's a big lover of baseball. I imagine it may not be about the New York area, but next to Daniel is Camille Bousset. Camille is the Assistant Director of the Office of Financial Education at the Consumer Protection Financial Bureau. Great to have you, Camille. Next to Camille is Rudy Araujo. Rudy is originally from Bolivia, and he's currently the Secretary General of the Association of Supervisors of Bank of the Americas, more friendly known as ASBA. Next to Rudy, we have Irene Filippi. Irene, like me, is from Argentina. She is the Resident Advisor and Regional Leader of the U.S. Treasury, Latin American and Caribbean Financial Inclusion Initiative, and she currently lives in Uruguay. And last but not least, we're very pleased to have Ulises Rojas from Chile. Ulises is currently the head of the Office of International Affairs of the Ministry of Social Development of his country, Chile. And as was briefly mentioned in the introduction, I'm currently the Chief Operating Officer for Acción. I was glad to hear yesterday from the speakers, I'm not sure if they're still with us, from Texas and Miami, about Acción's experience in the US. Acción, I think many of you know, but if very, very briefly, if you don't know, Acción is a pioneer in creating commercial microfinance. We created, in fact, in Bolivia, together with some local sponsors, the first ever commercial microfinance bank exclusively dedicated to the base of the pyramid in Bolivia, and then many others. Over 53 years, Acción has, together with local sponsors, built 63 institutions in 34 countries, primarily in microfinance. Today, we're also expanding in other areas of financial inclusion space beyond microfinance, in technology, innovation, microinsurance, micropensions, and so forth. And in addition, due to some of the success, commercial success of our prior operations, we have set up what you could call a little nonprofit within our own nonprofit, which is the Center for Financial Inclusion, based in Washington, D.C. And the center focuses mostly in promoting financial inclusion over years with specific initiatives. And the biggest initiative is the SMART campaign, independently run from Acción. And the SMART campaign is about consumer protection, primarily in microfinance. Now, Acción, as a practitioner, we work with many of you in the audience, but we also work with many of the people here in the panel. And what I can say is that as a practitioner in doing business in many countries beyond Latin America, the enabling environment for financial inclusion, from our perspective, is critical. I will freely make a comment that if you have a strong enabling environment, you're going to reach more scale. You're going to reach the excluded more. I think financial inclusion is about the excluded. And I think in our practice, we see a strong parallel where you have strong, broadly speaking, enabling environments, and more narrowly speaking, strong regulations, like Peru, I might say, other countries as well, where you can do much greater things and particularly reach more people. And without naming countries, if the enabling environment is not as healthy, or is more constrained, or is more difficult, we have a harder time. I think, simply speaking, yesterday many speakers spoke about scale. We have a harder time reaching scale. So today the panel is about broadly speaking, is about the enabling environment. What can the public sector, what can governments do to provide a stronger macro framework to enable more financial inclusion? And we have a lot of experienced people here. They will speak perhaps a little bit about the balance between implementing practices, policies to reach a bigger scale, and at the same time balancing that with issues like consumer protection and risk management. It's not always so easy. In fact, I think we all know it's very challenging, and that's why, in many reasons, we're here today. This problem, if to call it the challenge of reaching more of the excluded and achieving the goals of financial inclusion would be easier if we all had a silver bullet, which we don't. But I think we do have excellent experiences, and hopefully we will hear more today. So I briefly said who everyone is on the panel, but what we, as a group, we agreed to do, and today we work hard to try to make this more into a dialogue. I will ask every panelist to introduce themselves from their perspective. What role do each of you play in this space? Describe briefly what you do in your day-to-day jobs, and then what is your window, your perspective into financial inclusion. So perhaps we can start with Daniel. Please to share your perspective. Thank you.
Well, thank you very much, Esteban. Pretty hard task to summarize what a bank regulator does in, what is it, minute and a half or 2 minutes, which is the allocated time that I've got to share the opening statement with you. But fundamentally, the mandate a person like regulator gets is keep the financial system safe. Do whatever you have to do to make sure the banks work safely, that the money's there, that if you got 137 in your account, that's what's there. There's not 136 or 138. It's got to be precise. It's got to work like a relojito peruano. We like to say relojito suizo, but we have a relojito peruano. So we're supposed to work perfectly. Now, that's fairly simple. You keep all those folks out that are going to cause problems, right? So you have a very small, very safe banking system. That's what that's the way you solve this problem. Keep everybody out that's in any way possibly irresponsible. Well, of course, that doesn't work because the excluded are going to come in and force their way in. We know that. They'll block roads, they'll block the doors to banks, and do whatever they have to do because societies do not tolerate exclusion very well. The excluded get in the way of the included, and they gum up the works. So the next thing you discover as a regulator, you have to have a dynamic regulation. To have static regulations, they may look very safe. They're not stable. They're not lasting. So the art is, and it's an art. It's not a science. We like to think that it's a science. It isn't. It's really an art. How do you structure a set of regulations that are flexible enough to move with the flow, to move towards a goal, which is a growing economy, a better sharing of the benefits, a greater inclusion, but together with a context which is safe and which is sustainable. Sustainability means lots of things to lots of people. To a bank regulator, it means you have a system that's evolving in a gentle, deliberately fast but deliberately slow way, so that over a period of time it provides the service it needs to provide, which is access, reliability, availability, and above all, it's got to be believable, and people must feel that it belongs to them. That's a lot of things to do, and it's not easy. So Peru's worked hard at this for, I would say, 15 years. I've only been in office for 2 years, so you got to realize what I'm talking about comes from way back. It helps to have a good staff. We've got a remarkable staff. There's 800 people working at the Superintendencia. Some of them have been there 20 years. I asked them what their experience has been. Remarkable stuff. But so what do? You try to increase access. So the principle you use is proportionality. You do not regulate a small bank the same way you regulate a big bank. You do not ask of the small depositor the same thing you ask of the big depositor. The concepts are the same, but the application has got to be flexible. So when somebody is going to have an account that's limited to 200 soles or 500 soles, which is about $200, you've got to know your client. But that means something very different for a very small account than for a large account. A large commercial account is very different. So proportionality is a principle you got to apply. Hard to do in practice. What do you tell a bank examiner who goes out and looks at a small microfinance organization operating up in Puno, near Lake Titicaca, where there are no correspondent banking institutions? So, there's a lot of fine-tuning involved in this, but you need to be proportional. Proportional means get access. How do you develop access? It has to do with geography. How do you get there? Well, you develop branch banks. Okay, that's fine. But branch banks, how many can you have? So then you say, okay, let's do something else. Let's enlist all the drugstores and all the bodegas, and wherever there's a cash register, let's make that a branch, essentially a bank teller. Today that's easy because we've got phone lines, right? So you connect them. Wherever there's a connected phone line, you can have a cash in, cash out point. Then you move to internet, right? So now suddenly you have a whole branch, a whole network. We've got 25,000 of these points in Peru now, but 5 years ago there were only 3,000, so it's grown enormously. So you have to provide access. Now then you invent something. I don't know where I have my cell phone. I have an old cell phone. Can you see this thing? It's old. It cost me $20. It doesn't work very well anymore, but I can hear what people tell me, and I can talk to them. And what I'll be able to do in Peru in about a year is I'm going to be able to get my salary in the cell phone. Now, when you move to cell phone banking, it's a revolution. It's absolutely suddenly from having difficult access, particularly with these mountains involved, suddenly you got very easy access. So one of the things, and I'm going to stop here because my time's run out, but one of the things when access, you have to modernize your regulations because you want to make sure that cell phones can be accessed by the school teacher way in the boondocks, where she's got to travel 4 hours by truck and then probably walk to get to the truck so she can collect her salary. With these conditional transfers, there's lots of money going out there from the government, and you have to make sure it gets there reliably, and it's not very expensive to get it there. So we have to have a regulation for cell phone banking. So the regulator gets involved in a whole bunch of things like that, which have got to set a context that makes this thing function. And it got to be a context that evolves with the needs. So we've got to be responsive. We sound like we're stuffed shirts, stuck in the wood, stuck in the mud, and never do anything new. That's really not true. when you're sitting there, it may look that way, and you got to project this image that nobody can pressure you, and nobody can pressure us. That's very true. You got to, we are very independent sorts, and here Rudy's going to tell you more about all of us when we get together. I'll tell you, dangerous, because we don't want it, won't happen. Rudy's going to tell you more about that. What I'm going to tell you is the nice part. The nice part is not to get in the way of things, but to do it in a way which is sustainable. That's not always easy to find the right mix, and Esteban's talked about that. Inclusion and safety don't always go together. So you have to take some risks, and the idea is how do you contain them, and I'll just say one thing more. Everybody says when you include everybody, you got a money laundering problem, because there's something called smurfing. You know those little smurfs? These guys that are these little, the smurfs that we all like, and we have them, our kids use them in their toys. Well, smurfing involves sending very small amounts of money repeatedly so that you launder a lot of money by sending very small amounts. And the idea is you get under the radar, you don't get seen. Well, we got very good radar these days. They're called computers. Anybody smurfs, we catch them the next day. Because the same account, it can be a small account, it can go, but it goes 10,000 times. You see it immediately. These are outliers. All you have to do is plot how much goes through a particular account. And you see this thing going through the ceiling, groups, the next day you got the guy. So smurfing no longer happens because the people who want to launder money know perfectly well they're going to get caught before they're done transferring the money. They've already been caught. So there is no problem in opening small accounts to everybody. It doesn't matter who they are. We know who they are in principle. We know their characteristics. So we do know the clients, even though we do not know Juan Perez exactly. We may have his ID. We don't need to know much more because the transaction is very small. So there are ways to contain this thing. And, Irene will tell you more about some of the experiences that she's been helping people do or implement. So I'm going to stop right here. As you can see, it's a fascinating task, and you don't know how fascinating it is until you're inside. But many of you here are involved with these things, so you know from own experience. The potential's there. We got to dare to do some things, but we got to dare do them in a way which is responsible, because that's basically our mandate. Responsibility writ large, but doesn't mean immobility. So that's the tension. We're exactly on this continuum to replace ourselves. It's going to vary by circumstance, it's going to vary by country, and we all evolve. And we all learn from each other, which is why it's so nice to be here. So thank you very much, and we'll keep on going. Sir, back to you.
Thank you, Daniel. I could listen to Daniel for hours, and we'll come back to Daniel. But first, Camille, why don't you share with us your perspective on financial inclusion?
Thank you, Esteban. I want to say banking regulation never seemed so interesting until now.
There you go.
So I just want to say I'm absolutely delighted to be here, and I want to thank you all for coming. Also thank you to Osvaldo for the invitation to participate. I know that I'm going to be learning a lot, and mostly that's why I'm here. I am Camille Busset. I head up the Office of Financial Education at the Consumer Financial Protection Bureau in the United States. The Bureau is a new regulatory agency. It's about 3 years old. And unlike the Federal Reserve, the FDIC, the OCC, our other regulators, we are not a prudential regulator, meaning we do not focus on safety and soundness. But what we do instead is really focus on the consumer experience with financial services and products. And we are an outgrowth of the financial crisis of 2007 and 2008, a response to that crisis, which basically underlined the lack of protections for consumers in the financial system. So our role really is to ensure that the marketplace for financial services and products operates in a very transparent way and in a way that allows consumers to understand all the risks and opportunities of engaging with the system. It also means that we are very focused on creating and protecting an environment where consumers and responsible providers can do business and can continue to move the market ahead. Having said that, let me tell you what our particular authorities are. We do have supervisory authorities, so we do supervise banks over $10 billion in assets, and we supervise all non-banks. So this is the first time in U.S. regulatory history that non-banks, meaning check cashers, auto lenders, a range of other providers that are not banks, prepaid card providers, et cetera, are regulated at the federal level. We are the first federal regulator for most of those folks. And that is a very, very large task, but also something I'm going to speak about that's very important to the inclusion space. So we have supervisory powers over those folks as well as regulatory powers. So we are a rule writing agency, and we take that very seriously. We also have enforcement powers, meaning we really do have the responsibility to litigate as well as to ensure that all providers are following legitimate business practices. In addition to that, and this is probably the most novel part of the Consumer Financial Protection Bureau, we also have a whole division that's really focused on communicating directly with consumers, which really sets us apart, I think, from most regulatory agencies probably here in the Americas. So with that responsibility comes a lot of opportunity. And so let me tell you what we're doing in the financial inclusion space that's really relevant to this particular gathering. Because we have an opportunity to work directly with consumers, it means that we serve everybody, essentially the entire American population. That's over 300 million, and it means everybody. People who have just arrived here, people who have been here for generations, everybody who interacts with the financial services space. And because we have that opportunity, we also have the possibility of creating messaging and encouragement for people to really get involved in the financial services space. Because our regulatory authorities and supervisory authorities in general allow us to be much more focused on the entire financial services space as opposed to just the banking space, we also have an opportunity to create access points, access opportunities in a variety of product sectors and a variety of service sectors that are not just bank-led sectors and not just the sectors that are currently operating. So when you have this kind of authority that's very, very broad, you can operate from the level of function, the function of these particular products and services as opposed to specific products and services that over time will be transcended as people enter the system and as people have more and different needs in the system. So let me just conclude by saying that one of the most exciting pieces of being in this new regulatory agency is that it really, for the first time, allows us to have a special office that's really focused on financial access, financial empowerment, financial inclusion. That office is headed today by Daniel Dodd Ramirez, but was headed in the past by Cliff Rosenthal, who's right there. He was our very first assistant director in that area. And that particular office is very focused on making sure that the agency keeps front and center financial inclusion and financial capability for everybody who is here in the United States. So I will stop there.
Thank you, Camille. Now let's hear from Rudy about your perspective, which is quite regional.
Good morning. Thanks a lot. First off, I'd also like to thank Osvaldo for having brought us together, and the OAS and the State Department for bringing us here to New York to discuss this important matter. I'm the boring part of bank supervision and regulation, actually, and the boring part because I have to represent 36 countries. Not all of them think the same way. So I have to be very careful on what I say when I talk about bank regulation and supervision. But essentially what we do in ASBA is try to support our associate members in strengthening their practices in bank regulation and supervision. And that is basically with the objective to support financial stability in the region. And I think we've done our job fairly well because our region has been growing instead of dealing with crisis. We do this through 4 different vehicles. First, we promote training, then we facilitate technical cooperation, then we promote a lot of dialogue, and finally we represent the interest of all these countries in international fora. So that's why I have to be careful, and I have to be very boring in my participation. But essentially what we've done in financial inclusion, we have been engaged in this world of financial inclusion since the beginning, almost since the beginning of ASBA in 2000. We have been really researching the issue of microfinance and have a structured set of guidelines for microfinance in basically looking at the concept of microcredit. Those guidelines have been used in several countries as basis for the regulation. And we also have taken a step forward and decided to look at what is out there in terms of products, services, and channels that help the financial sector be brought closer to the people. And we found that essentially in the region we have telephones and we have correspondent banking, and the other practices have not yet been properly identified by ourselves. But once we've done that, we identified the potential risks, and we are proposing a set of rules to make sure that that these processes of financial inclusion are carried out in a safe and sound manner in the region. Finally, I mean, we've also developed in our webpage you can find a financial education program, as well as we have looked at consumer protection and the role of the bank supervisor in consumer protection. And finally, we looked at AML-CFT as because and part of the concepts that my chairman shared with you on the speed to fail or SMRFing are probably embedded in the proportionality concept. So in a way, ASBA is an organization that keeps on discussing guidelines on regulation and supervision from a very practical point. We don't engage in large research or anything like that, but rather we try to help the bank supervisor on the ground to provide them tools so that they can do their job better. Because if they do their job well, we're all going to be doing well. So stability in the region will continue, and even if we're going to have some sort of shake-ups as we move forward, we don't think that the stability will be compromised in the short term. Thus, our job is, like I said, it's the boring part, because what we do is we look at regulation, we look at supervision, and we believe in the world of financial inclusion. As we've been discussing this matter more and more, we are trying to change our mindset towards the direction of thinking more, not of financial inclusion, but of including people in the economic life. The same way you have access to health, the same way you have access to education, people ought to have some sort of way or means to have access to sound financial services. This is something that has to be discussed from a larger perspective, which is, I believe, economic inclusion rather than just bringing clients to the operators or bringing the operators closer to the clients. I think we need to think of a citizen that needs financial services and can actually use those services for his or her own objectives. And that is a complete concept, different concept of just merely saying, okay, we're going to do correspondent banking and we're going to bring this telephone to people. What we want that person to be part of the economic life, part of society, part of the growth, and share the growth and the benefits of our economies. So with that, I know I wasn't interested, but that's what we do.
Well, there's a wealth of experience there, Rudy, so thank you. And Irene, let's hear from you.
Thank you so much. Thank you so much for having me here and for the efforts of putting this together, Osvaldo again, and for having the opportunity of being here with people that I respect and that I work with. So thank you. So you might be wondering what's U.S. Treasury doing in the area of financial inclusion. This is a program that started in 2008 and then it started execution in 2009. And the idea was to leverage the good relationship that U.S. Treasury has with regulators and supervisors and central banks throughout the region and come together to agree on what would be the best practice and develop jointly a regulatory framework that could help financial inclusion. So I started out working in Guatemala, and I had the privilege of being there, living there for 3 years. And while being there, the program expanded to many other countries. you know, from, I'm now actually in the Central Bank of Uruguay, but Uruguay, Paraguay, Dominican Republic, El Salvador, Jamaica, Peru, Colombia. So because we are a demand-driven program, the only way that countries will demand that we accompany them is if we create trust. And trust is created when we work together and we are able to solve the specific problems that each country has in this area. So I just want to give you an idea of the type of work that we've been doing. I don't know how to operate this. How do I go forward? Let me see.
I think that
No, otherwise.
There you go.
Yeah, okay. Okay, go to the next one. Thank you. So just to give you an idea of what we do, because we've been doing it now almost for 6 years, also the demands, this is being in the frontier between innovation, regulation, and what people need. So, you know, when I started out years ago, what everybody wanted was definitions of microfinance. And I think this is very important still today, because we've been talking about inclusion since yesterday, and I think that at many points we talked about the same as if it is retail or wholesale, if we talk about productive inclusion or if we talk about personal finances. And I think that the tools are very different and the needs of the people are also different. So when we talk about microfinance, and microfinance started only as microcredit, and now we have insurance and, you know, and savings and other products and services. The idea was, okay, this is a loan that is repaid by the income that is generated by this small business, a small business that can be a lady producing tortillas in a plaza. But it's important to link it to something that will create growth. So, you know, that was actually the first requirement from the countries that we work with, and you know, as we develop that, then we realize, okay, in Latin America the NGOs cannot offer savings products, and it's as important to access credit as it is to know what you do with your savings. So let's create institutions that can actually be supervised, but the requirements to come into the financial arena is less demanding as it is for a bank. So we did that in several countries, you know, different shapes. In one country is called a retail bank, in others is called a MIC or a MAC, depending on the countries, but it's basically the same idea. Let's offer savings in a way that the bottom of the pyramid people are going to be safe. Then we moved, hold on, let me remember. As Danny was mentioning, how do we get people closer to these services? Okay, so how can we regulate that each institution can have representatives, agents, that can be all over the country? And for instance, in a country in 2010, we issued the regulation for agents. Today, it's a country that has 15 million population. Today, there are 6,000 agents all over the country. That's going to produce a difference. People are going to be able to use their time differently, and you know, you'll have positive spillovers of all kinds. Then people want to transact and send money. So what kind of a license do we have to create so that people can send their money in a safe way? We're still not talking about mobile. We're talking just, you know, going to an institution and being able to send the money. One of the issues that Danny mentioned also is, and it's actually the basis of inclusion and regulation. How do we define risk, and what are the elements that we can bring into regulation that will substitute for the very heavy and burdensome anti-money laundering regulation, for instance, that applies to the formal banking? And here comes, again, the invention of this sector of product design. The way that the products for inclusion are designed carry already what in Spanish we call candados, so that the smurfing doesn't happen, as Danny mentioned. And these locks, which have to do with the number of transactions, the amount and the balance, put together, it makes very costly for any type of laundering. So immediately you can drop and the level of burdensome regulation, and you can say, okay, this type of product is, I'm going to call it low risk. And if it's low risk, then the way that I'm going to identify the person that wants to use it is going to be a lot user-friendly. And basically that's what allowed for the creation, you can change it, the creation again of new tools for risk management for the base of the pyramid, like for instance the simplified savings account that now all the banks can offer, all the regulated financial institutions can offer, which is very easy to open, does not have a lot of requirements, and we are seeing it all over the region. It really works. So then, again, the market started changing, and not only Danny has a cell phone, as we know, so the countries require, well, how are we going to, this is a challenge for the regulator, because the regulator, what do they regulate? Financial institutions. All of a sudden you have the Secretaría de Telecomunicaciones, which is the institution that regulates all the telecommunications in the country, which is a completely different entity. So how do we bring it into the financial sector, and how do we standardize regulation? So again, the inventive in the region, the countries and the people that are thinking about these things thought, well, instead of bringing the telecommunications agency, let's create a new type of license of institution that we're going to call, even though they don't issue money, the issuer of electronic money, and let's make a license for that. So many of the countries that we've been working with have been moving in that direction. And then, of course, you need a legal framework, which is when you create a new supervised institution, you usually need a law. And then after the law, you need to create all the regulation that is a much more flexible tool. Now, we couldn't do all this if we would not be looking at the consumer regulation all the time, because it changes. I mean, 5 years ago, you didn't have all the new risks that you have today with all the electronic and technological new products. And also you need to communicate to people, so that is very important. The same with financial education. It demands the contents. We've been able to create a network of superintendencies and 12 Federal Reserve systems. The contents that the Federal Reserve System creates in Atlanta and in St. Louis is already in Spanish, even though it's more like sometimes maybe a Mexican, or but it's something that we can use. The countries in the region have been very interested. We also work with FTC in issues of financial education. And then of course the issue is, how do we distribute? And then we support countries that want to distribute through the Ministry of Education or through soap operas, like somebody mentioned yesterday. The important thing is to get the word outside so that people know, okay, what does this new product means to me? And then, because nothing that we don't measure really exists, we've been helping country put together, instead of the financial stability report that we're all used to know from the superintendencies, the financial inclusion report. And in some countries, for instance in Guatemala, that it recently issued the first report, you can see already, I mean, the statistics starts in 2010, 2009. We see already results that are very encouraging, and the same with Paraguay or many of the other countries that we've been working with. It's a pleasure to have received the trust from the countries, and I appreciate that, and we learn every day. So basically, I would like to give the floor to Ulises.
Thank you very much, Irene. And now we will hear from Ulises, who brings a very different perspective from the Social Development Ministry, a very different way of looking at the space. So, Ulises.
Okay, thank you. Lo primero, yo voy a hablar en español, así que, por favor. Y antes de ocupar mis 2 minutos, como lo dijo Daniel, primero quiero agradecer la invitación de OEA, particularmente dirigida a nuestra ministra, y claramente excusar su presencia porque, como ustedes espero estén en conocimiento, nuestro país en menos de 15 días sufrió 2 catástrofes muy grandes, un terremoto de 8.1 en el norte de nuestro país y lamentablemente un incendio de grandes magnitudes en la ciudad de Valparaíso, lo que provocó que aproximadamente unas 14.000, 15.000 familias estén damnificadas con prácticamente sus casas totalmente dañadas. Entonces, entenderán que el Ministerio de Desarrollo Social está abocado particularmente hoy día en la reconstrucción de esas zonas. Dicho esto, comenzaré con mis 2 minutos, espero que ahora empiecen a correr. Veamos, tal vez una de las primeras preguntas que uno debería hacerse en materia de inclusión financiera es si la inclusión financiera es una política o una medida para un objetivo mayor. Y ese objetivo puede ser tanto la eliminación de las desigualdades que existen en nuestras sociedades, particularmente en América Latina, o la superación de la pobreza también, en ciertos grupos en los cuales nuestra sociedad vive. Pero lo que sí está claro es que la inclusión financiera tiene que ser política o medida intersectorial. ¿Y qué mejor reflejo de ello? Por ejemplo, la constitución de este panel. Es decir, vemos desde una superintendencia de bancos, vemos el Tesoro norteamericano y el Ministerio de Desarrollo Social de Chile. Yo creo que eso refleja un poco lo que debe ser la inclusión financiera. Y dicho esto, sin duda el Ministerio de Desarrollo Social, por ejemplo, está abocado al diseño y la coordinación de las políticas sociales dirigido tanto a las personas, grupos o comunidades vulnerables. Y como ustedes entenderán, estos grupos vulnerables viven permanentemente en la desigualdad existente entre brechas que no solamente son de ingreso, son de oportunidades y acceso a servicios sociales. Y dentro de estas desigualdades también existe la inclusión financiera. Y aquí viene una segunda pregunta: inclusión financiera, ¿para qué y cómo? Espero que en estos 2 minutos por lo menos dejar claro el para qué primero y tal vez después tratar de responder el cómo. Permítanme darle un par de indicadores o cifras de una encuesta, la CACEN, que se realiza en Chile, que es la encuesta de caracterización socioeconómica que nosotros desarrollamos cada 2 años desde nuestro ministerio. Y una de las primeras cifras que nos dice es que el 75% de la población en sectores vulnerables en nuestro país, estoy hablando aproximadamente de 1.070.000 personas, no tiene absolutamente ningún medio de pago electrónico. ¿Y por qué no tiene? Yo diría que por 3 características. Primero, porque simplemente no sabe que puede tener un pago electrónico. Segundo, porque no puede acceder. No puede acceder por motivos geográficos, no puede acceder por acceso al sistema y no puede saber también por condiciones que el propio sistema le impone para poder tener algún pago de medio electrónico. Y un tercer grupo que lamentablemente es que simplemente no quiere tener un pago electrónico. De este otro 25% que sí tiene un medio de pago electrónico, hay un 47% que tiene tarjetas de crédito. Y tarjetas de crédito que otorga el sistema no bancario en nuestro país. Estoy hablando de casas comerciales, estoy hablando del retail. También otro indicador que nos menciona esta encuesta es que los beneficios sociales que paga el Estado de Chile, aproximadamente en un 97% de la población, es decir, 1.500.000 personas, lo recibe de forma efectiva en cash, digamos, es como recibe su beneficio social en nuestro país, es decir, un 97%. En resumen, los excluidos financieramente en nuestro país son prácticamente el mismo grupo objetivo de las políticas sociales que nosotros diseñamos. Dicho esto, por lo tanto, el objetivo que debería tener la inclusión financiera, no solamente en nuestro país, yo diría que a nivel de América Latina en general, es que debe ser orientada primero hacia los grupos vulnerables. Segundo, debe crear servicios de financiero de calidad. Tercero, debe proporcionar la protección necesaria y adecuada al consumidor, en este caso. Y además, una mayor participación en el entorno social, tanto como política o como medida. Y yo diría que también, como último factor, de los 3 grupos que mencioné anteriormente, esta inclusión debería estar dirigida particularmente a quienes no saben y a quienes no pueden acceder. Porque una cosa que no podemos obligar es a aquellos que no desean. Es una decisión libre que deberían entregar. Permítanme entregar también un gráfico de lo que puede ser. Mire, este escenario que nosotros tenemos puede facilitar también la rápida instalación de la inclusión financiera en nuestro país. Y estas son las herramientas a las cuales nosotros accedemos en el sistema financiero en Chile. ¿Qué nos dice? Primero, esta es una tabla que ha evolucionado en 6 años, desde el 2006 al 2012, en que, por ejemplo, la segunda línea nos dice que el número de sucursales bancarias en Chile se ha incrementado en un 15% en 6 años, de 2036 a 2344. El número de POS, estas máquinas de registro que nosotros utilizamos en el comercio, tarjetas de crédito, tarjetas de débito, se incrementó en un 172% aproximadamente en estos 6 años. El número de cajeros automáticos se incrementó en 6 años en un 66%. Pero la primera línea es bastante interesante, porque el número de corresponsalías, estoy hablando de un sistema que otorga el Banco Estado de Chile, es denominado cajas vecinas, que es un sistema en el cual la gente accede en diferentes tipos de locales, donde se venden la lotería, donde pueden venderse frutas o otro tipo, digamos, de comercio, aumentó prácticamente en un 10.000% en 10 años. Este ha sido un sistema que de alguna u otra forma ha facilitado en algún grado la inclusión financiera de ciertos grupos que están alejados geográficamente. Es decir, una de las particularidades que tiene, por ejemplo, Chile es la dificultad geográfica que nosotros tenemos. Es muy largo, pero además con una diversidad muy compleja. Ya, dicho estos datos, es decir, el escenario en que nos encontramos, con el acceso en términos de tecnología en materia de inclusión financiera, y además los indicadores que le acabo de mencionar, creo que nosotros tenemos grandes desafíos. Por ejemplo, en una primera etapa, desde la mirada de la política social, nosotros deberíamos orientar 2 líneas de trabajo. Primero, el pago de beneficios sociales. Les voy a dar un ejemplo muy claro. En el caso chileno, esta catástrofe que nosotros acabamos de vivir puede ser una gran oportunidad para que estas 14.000 familias puedan percibir rápidamente a través de un pago medio electrónico bonos que hoy día de manera urgente el Estado de Chile está entregando. Hoy día el Estado de Chile está entregando 2 bonos para de alguna otra manera avanzar en materia de reconstrucción. Un bono que es prácticamente $1.000, que es para menesteres, porque además se le está entregando casas directamente a las familias, pero la idea es que cuando llegue la familia a las casas no solamente se encuentre con una casa vacía, sino que además tenga la posibilidad de instalar rápidamente una cama, un mueble, una cocina y poder reconstruir su vida rápidamente. Entonces, para aquello necesitamos que este bono de $1.000 lo perciban ya. Y en este sentido, esta es una gran oportunidad que una catástrofe como esta que nosotros hemos sufrido nos pueda ayudar para avanzar en materia de inclusión financiera. Además se está entregando otro bono, un bono que es para comprar ropa de $200 aproximadamente, y esto también tiene que ser de manera urgente. Y la otra vía de trabajo que nosotros deberíamos trabajar desde la política social también en materia de inclusión financiera es incentivar el ahorro. Porque ustedes entenderán que este grupo vulnerable, de alguna u otra forma, que tiene salarios mínimos, estoy hablando de $400, o que tiene una pensión básica, que son aproximadamente unos $200, no podemos motivar el gasto en ese sentido. Lo que sí tenemos que de alguna otra manera promover es el ahorro en estas familias. Espero que en esta primera intervención el para qué haya quedado un poco claro y trataré de explicar el cómo poder avanzar desde este sector en materia de inclusión financiera.
Gracias, Ulises. Very interesting perspective and very different perspective, and perhaps taking what Ulises said about, I think everybody explained a bit the context and what they do, the for what, the objectives, and now let's get a little bit into the how, the cómo, and perhaps maybe I can start with Danny, and each of you may have a different perspective about the how, but perhaps I may suggest what is essential in the how. If there's something you want to share with the audience, and I know this is very difficult, but it's been hard to keep to the 2 Peruvian minutes. So what is the most essential? What is the most essential in the how?
Well, you know, the beauty that you know you have when you're sitting in the Ministry of Social Development is that you can actually do the how by getting out there and doing it, because you have direct capacity to implement. When you're in the superintendency, you have indirect ways of doing it. You're trying to make somebody else do something, or you try to create a context where something else will happen because somebody else will do it. You don't really do anything yourself. When you do something yourself, typically it's to prevent somebody from doing something. You're trying to prevent something bad. The good stuff you enable, and you hope that it's going to happen. It's not quite the invisible hand, but it has some of that characteristic. So, what do you do to make it happen? Well, basically you write regulations, and this is, you know, beautiful to hear. You know, music to my ears. Write regulations. Writing regulations is an incredible challenge, because you got to put the commas in the right place. You got to make sure, you know, because words matter immensely. If you don't craft it quite right, it won't work. And so, how do you do that? It's an incredible challenge. Now, we try to get these cell phones working. What happened to my cell phone? Went into the wrong pocket. Okay, we're trying to make cell phone banking available to a country where we have 30 million inhabitants roughly, and we have 32 million cell connections roughly. Subtract the children, so typically people have more than one cell connection. How do you get them to use it? Well, you have to make sure that, for one thing, all the telecoms work together. So we don't regulate the telecoms, we regulate the financials. So how do you do that? So we went to our Congress and said to the Congress, basically, look, the two things we have to make sure happen here. Three things. Got to be safe for sure. Well, that's standard, not a problem. You have to have the different telecom, the telecommunications has got to be interoperative. You can't, if somebody is a Telefonica customer and somebody's a Claro customer and somebody is an Nextel customer, they have to be able to transfer money through these three systems. You can't have these systems fighting. That's one thing we need. The other thing we need to make sure that all the financial institutions can access the same system. It's got to be one system. And the access got to be uniform. And the costs have got to be low. So that means you got to go for scale. It's got to be big, because in these things, scale matters. It's only inexpensive when it's big. And how do you make sure it's big? Well, you get all these transfer payments involved. You get the government payments leading the way, because then you get scale. And then you hope that the private sector will get together and do it. Now, what we observed is that about a year passed, and you had various private sector organizations jockeying to see who was going to get what piece of the action. Everybody wanted to have a larger piece. And so there were all these negotiations going on. You had large companies like Visa and MasterCard involved. You had the Telefonica de España involved. You had Claro, which is Mexican-based, Mr. Slim's organization involved. You had Nextel, which is based in the U.S. involved. And then they sold to some Latinos, so they're no longer U.S. And nothing was happening. It was literally like a group of people standing around a pool. Everybody had their bathing suit on, and nobody was jumping into the water. So, I mean, as we watch this, we have the temptation of pushing somebody into the water, so it would start. But you can't do that. You're a regulator. You know, if anything, you're going to keep them from jumping into the pool. You're not going to push them into the pool. That's irresponsible. So, well, eventually, what fortunately happened is somebody in one of the large banks said, look, this is silly. Nothing is happening because we're all trying to get a larger piece of the pie. And the result is nobody will get anything. So what we need to do is have an agreement where we're all going to participate, we're going to collaborate initially, and we'll compete a little later on. Let's get the thing started so there's something to compete about. And lo and behold, now we have the Modelo Peruano, which is an agreement where everybody, the whole financial system, now that includes the largest bank, which got about 30% of the market, to the smallest caja municipal and rural, which are, you know, this size. They all have the same access, the same price, the same system. It's one platform. It's centrally designed. And everybody's going to have access. And what's happened is the 4 telecommunications people are involved. Now there we had the alliance. So there was reluctance on their part. And the telecom regulator was reluctant to get involved because they don't know how to deal with finance. They deal with connections. And so what do they know from finance? Well, our padres de la patria, our Congress folks, were very wise because they wrote into the law an article that said, and the telecom regulator is hereby enabled and charged with the responsibility of making sure this happens. The language is a little different, but essentially it said that if the telecommunications companies were getting in the way, they were going to be, helped to be positive. And that article turned out to be very important. And see, my cell phone, they're trying to send me some money. We're going to ignore that at the moment because I don't want to get any payments today. What's happened, this process took about, there's a pain in the air. Here, let's see if we can turn this thing off. Okay, it stopped. No money. So over a period of a year and a half, we've moved from a situation where it's been the concept of having a payment system working in Peru was a concept to now where it's actually beginning to happen. And what's more, we got somebody charged with doing it. The banking system, the ASBank, the Association of Banks, indeed appointed a manager for this, who is a very charming lady, Carolina Trivelli, who was our Minister for Social Development until not very long ago. And she also knows about microcredit. So she's not charged with making it happen. What is it? It is microcredit and microtransactions and micropayment system, incredibly accessible in a quantum jump. It does take somebody to do. We were talking with her just a day ago. She was in Bogota and sharing some of her headaches as to how to actually make this happen. You got to sign contracts. You got to make sure the clauses are right. You got to make sure the commas are in the right place. Lots of things have to be done. Implementation is not easy, but we know what we want to implement, and it's very clear. Terrible noise. It's actually, I'll tell you what it is. It's just so your curiosity is satisfied. It's my son who's calling me, and probably wants me to transfer some money, right? We spend a good part of our time asking ourselves a couple of questions. What do we need to do in advance of the next market development so that it happens safely and soundly and actually occurs? What obstacles are going to be in the way, and what ditches are there going to be along the way that people can fall into, because we want this thing to go well and smoothly. And third, the other thing we keep asking ourselves, what's out there that we're not seeing? Because a large part of being a regulator, and a prudential regulator particularly, is you want to be prepared with contingency plans. Now, we just heard about the natural disaster in Chile. We have a division, and this is an important division in our superintendency, that worries about continuity of business. What happens when you get a terremoto or something like that, and it turns out that in a whole town, banks don't work because the electricity connections have failed? How do people get access to their money? They go to an ATM machine. The ATM machine isn't giving out any money because there's no electricity. How do you talk to the bank manager? His phones don't work. You've had lots of experience with that. We worry about that. How do you make sure that the system is there when people need it? Now, that's something most people don't think about very much, because we take it for granted. It's going to be there. We're going to be able to draw the cash, but sometimes you can't. And so this is contingency planning, which is part of the responsibility. And when you talk about inclusion, bottom of the pyramid, it's much worse there. When something goes wrong, the people in that segment get hurt worse. Now, it is true that they have other means of support and other means of resolving their problems. Incredible ingenuity, and I'll take another half a minute, because one of the critical things which I think is very, very large in Latin America and not quite as large in the United States, and it's something that we all need to think about, how we translate one reality to the other. We have very informal economies. We have economies that have large informal sectors. Informal sectors means that there's social network, family institutions, extended family relationships, long-term pros and cons, and doing each other favors that enable people to survive. That generates an incredible flexibility, because these systems adjust quickly and rather well, particularly to emergencies. In emergencies, everybody rallies around. In economies or societies that are more formalized, where the social distances are larger, where family relationships, families are atomized, they're much smaller. You know, it's father and mother and children. But the uncles and aunts are not really that connected like it is in the United States. Much harder. You don't get this kind of social response. You do get it sometimes. You've seen when there's been a shooting in Connecticut, everybody pulls together. But you need extreme cases. In our societies, it's very common that you have these social networks that support each other, so that the informality is a plus. We see it as very often as a negative because, sure, it's informal and things happen that we don't know about, we can't regulate, and people don't pay taxes and all sorts of things. But the informality is really something which enables societies flexibly to respond to their demand. As a regulator, you want to use or benefit from informality in the way that preserves its strength, and you want to limit it and move beyond it in a way in which you complement it with formal structures, because you need both. And this is something which I think most of us don't understand very well. We know at some intuitive level that these things have their role. The temptation is to force everything into a straitjacket of formality. That typically doesn't work. So inclusion is this mix of benefiting from the informal structure, providing it with support, and particularly often finance, because finance in an informal sector enables lots of production, lots of economic activity to occur, which will not happen in a formal system. And you have to find a way to have these two systems interact in a manner which is functional. Now let me give you one final example of, I'm going to talk 28 seconds more. There was a time in Peru when unemployment was particularly bad, times were bad, people couldn't find work. And so you found suddenly that along one of the main avenues of Lima, a number of ditches appeared. And people were standing at the ditches and they offered to repair your muffler, your car muffler, these things that keep the cars from having noises. So if your car muffler began to get corroded, which happens in Lima very much because it's very humid, so these mufflers don't last long, you get corroded, you had a choice of going to the car dealer and having it repaired at maybe $100 per repair, or you could go to one of these ditches and they're repaired for much less. And they had no installation really, no installation cost. You drove over the ditch, the fellow gets underneath, takes off your muffler, puts in a new one, and off you drive. Informal. But what a wonderful solution. People created their own jobs. Now, these are people whom you wanted to finance because you really wanted them to be able to have a stock of mufflers, you wanted them to have some tools, so these are businesses that are informal businesses but created production, created wealth, they created employment. Now it's true, they took a piece of the market away from the car dealers. But this is part of competition, if you like, right? Now, in the United States, imagine if somebody tried here on 42nd Street to dig a ditch and repair mufflers. Impossible, right? The United States and other, more structured societies don't have room for somebody to dig a ditch and repair, mufflers on the street. It's just not. The police would arrive immediately and arrest them, right? Not allowed. So I'm giving you this example because as we think about informal finance, as we think about microfinance, as we think about what kind of institution we want in the financial system, we need to think about ways to bring in and support the kind of ditching that we're talking about, because that's where a lot of the employment gets generated, and that's where there's productivity from finance. It's not just consumption. We can't just finance consumption. We've got to finance production. This is production. It may be an unusual kind of production, but it's production, and we need to think about how we can stimulate that kind of production while keeping the economy flexible enough so the car dealers can adjust to this new kind of competition, which is the other part of it. Now that's a challenge when we think about informal finance in the United States. And it's going to be a challenge for those of us who used to it in our own societies where this has been working pretty well. How do you move this to Miami and New York? I'm not quite sure what the answer is, but maybe, if we get convened again here at some other time, we might all have some answer, but I think that's one of the things we need to think about. How do we translate what's worked well for us in societies that have this kind of flexibility into a much more structured situation, but we may have some parts that are quite flexible. We need to find where it would fit. If we can do that, we're going to have really translated experience in one place in a particular context into possibilities somewhere else. and that'll be a kind of inter-American interaction that I think would be terribly helpful, because then those of us south of the border will have, provided to our brothers in the north some useful experience that's actually applicable to their own conditions in the United States, which are somewhat different.
Thank you, Danny. I think the whole concept of the informal sector is indispensable when we talk about financial inclusion, and sometimes we don't touch on it. And we're here with a lot of governments, the public sector, and of course there's the obvious dilemma of supporting the informal sector, and that's a sector that's not formal by definition, not taxable. Rudy, perhaps why don't you share, let's stick to that topic. Let's try to have a little conversation, maybe a debate. You've seen many governments. I know you don't want to touch on specifics, although you yourself were in the high level in Bolivia, but just looking regionally, how does one help the informal sector, and at the same time, I can say it, almost recognizing that it has to remain informal for many years to come, while we also want to formalize?
Well, I think the first thing is you have to probably, okay. The first thing you need to recognize is to understand that there is actually part of your society that's excluded. If you recognize and analyze that segment and how they live, and how they carry out their economic life, then you're going to think, as a public policy maker, how to resolve the problem and bring them into the economic life. And that's probably the greatest challenge any government will have. I've dealt with one, and I know that when you think about that citizen that is not part of society, because it's not. I mean, you're not giving that citizen health. You're not giving that citizen education. You're not giving that citizen access to healthy water or anything. And then all of a sudden, there is some sort of economy going on. So how can you understand that economy and bring it in? So the first challenge is to understand that, and to have a perspective of a policymaker. So first, how do you adopt a policy? Now, on the how, on responding to your question, I think as well as we have proposed globally that every country has to have an anti-money laundering counter-terrorist financing strategy, we need to think of strategies that include people in the economic life. Recognizing that a lot of the emerging markets have a lot of informality in them. And how do you bring that informality? Don't tell them we're going to tax them. Recently, one of our countries has decided that every individual has access to a bank account and it'll be free and everything. But there's one catch. Once you open an account, you will be provided a tax code. Do you think people are going to go? Do you think people are going to go and say, hey, I want to open up an account and I want to have a tax code? The formal people are scared of that. I mean, because they don't know how to deal with that. They don't know how to deal with government. Government is not there for them. It has not been. They had to make their lives somehow. So that's one thing. How do you how do you create a coordinated policy for economic inclusion? Second thing is key to have information. Information is fundamental for every development of any sort of policy. So if we let credit bureaus and everything develop in the private sector, so on and so forth, and we have no access to that, and there's cost to that, then we are putting a huge brake to further development. So why don't we just decide that that kind of information is of public interest, and anybody with a reason to use it, to have access to it, can use it. So there's no property over that information, and I think I'm getting myself here into really heated waters. I know, but I believe that's key also. And then that infrastructure needed for credit bureaus, that's fundamental. Because if you have that information, if those credit bureaus have positive and negative information, if this can be used for further development, that's fundamental for any sort of inclusion process. Then, okay, we have that. What's the other key factor? Why don't we have identification systems? Do people really have IDs? I mean, here in the U.S., you have to have a credit card and a driver's license. That's what you have to have, as far as I know. I couldn't check in at a hotel when I first came to the U.S. because I didn't have a credit card. I said, but I have cash, and I have my ID. He said, no, you have a credit card. That makes you, you're included, right? So, what happens to identification systems? If countries do not make a real effort to develop identification systems that are accessible, and there's one code for everyone, social security numbers, whatever, then you can identify that person. Then you know what that person is doing, and then you can probably further develop the system. Then you work a little bit on the what happens, how do we protect this new world? Yeah, it's important to have consumer protection institutions. But let us understand that consumer protection goes both ways. It has to be a balanced approach. Yesterday I was listening a little bit of this code of consumer protection means killing the provider. Let's go for the bankers, take advantage of people. We have to go again for we have to bring them down. That's not probably the proper approach. I think the proper approach is to balance the relationship between the client and the provider. And that is, both of them need to know clearly what the rights and obligations are. You have right to use the financial sector, but you also acquire obligations. You have to pay back. It's not that you can probably bring 100,000 people march and say, we're not going to pay again. Now this has happened to us in Bolivia. I was there. Right. We had people put grenades in their collar of grenades and say, we're going to blow this person up if you do not write something that says we don't owe anything to the financial sector. We can't go, I mean, you can't have financial inclusion this way. This is not the proper way. And finally, financial education. I'm glad we're here with Camille. I think she can share a lot more of financial education. And I think a lot of people are thinking, this is a public policy. How is it good we can approach financial education without making financial education something of a fidelity sort of thing? You know, you don't educate people when they come to your organization and say, okay, we're going to provide you, this is credit, you have to pay back, but if you go next door to the other, we're never going to open the door to you again. That's not financial education.
Why don't we actually go into Camille and share your perspective a little bit along the lines of what Rudy's talking about. I imagine you have some things to share with us, but let's also try to engage and keep it a little bit to this, the how, reaching the informal, and in your case on the consumer protection side.
I first want to say that, do we have a mic here? Okay, great. I first wanted to say that my comments here in this part of the session are really the culmination of a lot of experiences I've had, not just in the regulatory sphere, but also in the private sector and in the non-governmental sector. And they do not represent the views of the CFPB. So I was very struck by the explicit focus on the informal sector, and I do want to spend a little bit of time on that. But what I want to do, just for the purposes of ensuring that we all get to talk a little bit, is I want to sort of go through a list of what I have seen as being really important to facilitating inclusion, and then I'm going to focus on one or two areas so that I can take full advantage of my Peruvian 2 minutes, but not my Peruvian 20 minutes. So. I think one of the most important things to recognize with respect to financial inclusion, and it is a real tension, is that innovations and ways of bringing folks into the more formal financial system, and I do not mean banking, but I mean more formal as opposed to money under the mattress. Can come from anywhere. And I think one of the most important things to recognize when you're in an official capacity is that innovation is a good thing. That utilization of an informal context that provides those kinds of innovations already is a good thing, and you want that to happen. So you want to be in a position where you are not holding back that kind of innovation, and you have to recognize that inclusion, financial inclusion is going to come from a variety of different sectors. It's going to come from obviously the financial services sector, but different players in there. It could be technology, it could be MFIs, it could be community organizations, it could be lending circles, and you have to be as inclusive as you possibly can be for inclusion to really work. And the reason for that is that people come to the financial sector from a variety of different contexts with a variety of different experiences and different needs. And they are not going to be the same, and they're not going to be solved by banks exclusively or by prepaid providers or by mobile providers exclusively. So you need to have a really broad range of products from which folks can select depending on their needs and their own preferences. And that's the first point. The second point is that with respect to consumer protection, you definitely want to have a strong framework. And what I mean by that is it's probably most advantageous, particularly in emerging economies, to think about how you might regulate functions as opposed to products. So let me give you an example. So in the EU, for instance, they regulate payments, not prepaid cards. Specifically. So you want to be at the level of the function that the service or product is going to provide, and less so on the product, because the product will change over time, the technology will change over time, and you want the rules to be flexible enough that you can update guidance and you update supervision to keep up with the technology, but the rules, the regulations themselves do not need a lot of tinkering. So that's the second thing. The other piece that I want to spend a fair amount of time on is, as you are thinking about creating an enabling environment for financial inclusion, you also want to think about the consumer. So how are you going to communicate with the consumer, or how are you going to encourage providers to communicate with the consumer around products, services, and more importantly, financial decisions? And I'm going to have a lot to say about that because that's the area that I work on currently. But let me go on. So the fourth area that I think is really, really important to enabling financial inclusion is that there be a lot of regulatory harmonization. So in some places, that regulatory harmonization is actually fairly well done. In other areas, it takes a lot of work for the telecom regulator to talk to the various financial regulators. And so that is definitely something that has to happen in order for inclusion to be seamless, in order for the protections to be seamless, in order to have a level of certainty that what is done by one actor isn't going to be undone by the regulator who's operating in a slightly different sphere. So that regulatory harmonization is actually quite critical. The second, and there's been some discussion about that already, but I think it's something important for all of us to recognize. You have to work with others. The fifth thing I think that's really most important is that you do need to learn from international examples. Providing payments infrastructure, providing G2P opportunities, government to individual people payment opportunities, for instance, for government services and benefits, et cetera. These are all things that have been solved slightly differently in other contexts, and it's important to learn how other folks have done that. That's really critical, and I think that is part of the gestalt here, part of the ambiance here, and it's something that I really want to underline as being critical to not making the same mistakes that others have made, but also being able to overcome challenges that you yourself might have in your own context. So let me stop there in terms of the list of what I think are sort of the really necessary elements, and let me talk a little bit about the consumer education piece. One of the most important things that we have really focused on in my particular office is that, I think a lot of times when folks work in the space, they really think about normatively how a consumer should act in the financial services space, what kinds of decisions they should be making, et cetera. We actually don't come from that perspective. In fact, from our perspective, it's really important to understand the frame of reference that an individual consumer is working within. That frame of reference is going to be their social context, meaning their social network, their sense of economic opportunities, their sense of social opportunities, the sense of how they might want to or might not want to interact with financial institutions and other financial providers. All of that is what a person brings to an interaction with financial products and services and interaction and decisions about financial services. So it's very important to understand that, because if you don't understand that, then you're simply lecturing people and you are not providing them with information or guidance that resonates with them. And so the most important thing that I have to say with respect to education is that you really do need to understand that context. You really do need to understand what will resonate with folks so that you can get in front of them in a way that is very meaningful and very thoughtful, and you can then help support them as they make decisions to realize their own goals and their own aspirations. So I'll stop there.
Thank you, Camille. We've actually, time just flies by. It must be something about Peru. But why don't we, I apologize to the panelists, but we have a lot of interest from the audience in a couple of questions, and we started a little bit late and we have to catch up. So one or two questions we have time for, if you, and if there aren't, we actually, is there one in the back? Please, if you.
Hi, good morning. Anthony Santiago, the Institute for Youth Education and Families at National League of Cities. So a lot of stuff, right? A lot of things this morning, how government is viewed, how we deliver services on the social side so that we can do it in dignity, with dignity to the recipients, to the folks that we're trying to serve, and getting the residents who we're trying to connect with to understand that we do more than like write parking tickets and fill potholes. But I did have a question in regards to education, and I think yesterday it was mentioned this kind of like cultural approach to creating novellas, and I remember Schoolhouse Rock, right? We used to do kind of like a really good job with public service announcements and educating folks, and the American Ad Council. And so with CFPB being a kind of leader nationally for financial inclusion, financial access, and I'm wondering, is there any way we can do something that, as you said, kind of like delivers the message in a dignified way that makes the cultural connection, but also kind of plays on technology? And so I'm wondering, is there a direction that we can kind of go in? Because we, and I'm also aware that CFPB is investing in the one-on-one coaching, which I think is a critical element in kind of like really making it stick. The classroom piece doesn't work anymore. And so is there something that you guys kind of are thinking of, potentially leading, the same way that these innovations come up from the ground? I was with the chief of staff in San Francisco just last week. They were talking about how Uber basically created itself. And so, folks do need access to loans. They do need access to credit. So.
Yeah, so let me address that pretty succinctly. Generally speaking, the CFPB has been using a range of means to communicate with the diverse range of consumers that we serve. We recently had a pretty long campaign to publicize the new consumer protections in our remittances rule. We have a new remittances rule, and the protections became effective in October. And as you can imagine, folks who use remittances tend to come from a variety of linguistic backgrounds. So that campaign in particular was multilingual and multi-platform. So we did everything from having posters in money transfer locations to having ads on Pandora to having YouTube pre-roll. We also had radio ads. We did a lot of interviews, particularly in Spanish, but we had a variety of different ways of reaching consumers, and we think that that's very important. But let me say one other thing about that, which is that with respect to communication, different people learn in different ways, and you have to use a variety of different tactics to reach folks. But one of the things that I think we have learned from our colleagues abroad is that there's a lot to be done with communication that doesn't really rely on like a lot of text, right? So particularly in a community that's so multilingual as the United States, it's very important to be able to investigate how to do, to provide support and information in a way that's really visually oriented as opposed to really focusing on language. So that's another area that we have begun to prioritize.
Thank you, Camila. And perhaps to close, very briefly, to wrap up, I could ask Irene and Danny to share if there's one thing we can take forward from this meeting, from this panel, what is the one thing that we can take into practice? Perhaps Irene first, and let's be 45 seconds, Peruvian seconds, maybe one, and then
Actually, I also wanted to add a couple of things. From my perspective, as soon as I get to a country, I think it's very important, because we talked about the informal sector, to separate in the head of the regulators and my own, the difference between illicit trade and the informal sector that, you know, is 90% of or 70% of the work population in a country, and understand that the rules that apply are very different, and that even though, you know, the informals might not be paying income tax, they're paying all the indirect taxes, and they certainly pay the most regressive tax, which is inflationary tax. So from there on, I think that we can build a consensus and see how we can empower this sector. Now, going forward, you know, I had the opportunity of visiting many countries, and I'm really impressed on the innovation that goes on in the region. And I do think that because many of the groups of the populations of the countries in the region, you know, share a lot of common traits in the United States, that we should continue meeting and trying to identify what of the best practices that have worked in the region can also be maybe shared here in the United States, as much as we take home from the United States things that have worked here that we can then apply there. But I do think that the wealth and the body of you know, evidence of what has worked that we have been applying in the different countries in Latin America is something that we should start to think, how can we then share not only South-South but maybe South-North, and I think the time is approaching for that. I just want to say, you know, and this is something that my colleagues mentioned, one of the first things that we do together in a country is to create an interinstitutional mechanism, because people think, oh, financial inclusion, yes, you know, that's something that only one institution in the country does. No, actually, it crosses horizontally through all the institutions in a country. And governments are not built to work well horizontally. Governments work vertically. So we need to create a mechanism, and it has been very successful. As soon as you give space to people, they all feel, the institutions feel included, and that's the first step to financial inclusion, which is government institutional inclusion. And then maybe the last thing that I would like to say is that certainly not one size fits all, and that it is very tempting to think, oh, my neighbor did this, is so good. But you know, maybe the reality in that country is very different, and sometimes it's violence that keeps people from actually wanting to prosper and have access, because then immediately they feel the fear of retaliation. So you know, if you don't address that, then the policies for financial inclusion will not be effective. Every country is different, and you know, we mentioned a little bit about use and access, and I think from there on to make like a roadmap that is specific for each country's need. And thank you so much.
Thank you, everyone, and we have run out of time, so please join me in thanking the panel for a very good discussion.
Thank you.